Hey guys, Akil here. Welcome back to the show. In today's episode, we're going to talk about profitability versus frequency and the balance that you got to kind of have between the two when it comes to seeing if something is actually worth trading or not. Now, what I'm referring to in today's podcast is one of the new trading strategies that I've been working on for some time now. If you guys want kind of a behind the scenes look or kind of want to stay up to date with how it's going, just make sure you check out the content that I've been putting on YouTube. Just YouTube search Akil Stokes. You'll find the page. You'll see lots of videos uploaded daily. Check them out and you'll be in the loop. 8%. So 8% of the total signals are that continuation. So you got to ask yourself, because one thing we need so here's a cool example. We spoke earlier about kind of the VS1s at a meeting. Another thing we discussed at a live meeting once. Again, we had this whole, it was like what do we have, OG? It was a workshop, but before the workshop, we had like a 3-day seminar for our mastermind members before kind of like a big live trading workshop. And we had this brilliant trader, David Alcindor, French doctor, one of the most brilliant minds I know in trading. Perhaps too brilliant because you can't really understand what he says. But he had developed this trading system and he brought it to us because we were going to try and automate it, right? We had a coder in, and so we were going through the whole process of teaching people how to code and all this fun stuff. And the system was so defined, it had so many filters, right? That the hit rate was 90%, guys. 90% hit rate on this strategy. But the problem was this. There were so many filters that it only offered 2 opportunities a year. 2 opportunities a year. So let me ask you this question, right? Would you trade something that gave you 2 opportunities a year? Is that frequency high enough to make it worth it? So not only do you get to think about the monetary perspective of it, but think about the time investment. The time investment of research every day, knowing you're not going to get any opportunities. Think about how lazy you might become, where it's like, I haven't gotten one in like 4 months, so I'm just going to wake up a little bit later today, or I'm going to step away from my computer and go play with the kids today. And then maybe you miss, right? Now, if you're super organized, obviously you have alerts and stuff, right? But let's say you're not super organized. What if you miss one opportunity? What if you're sick? What if you're on vacation and you're on a flight during one of the opportunities? Now you've missed 50% of the chances, right? So you got to think about it from that perspective as well. So you need a certain amount of frequency in your trading. So if you have something that gives a small amount of opportunities, right? Now, obviously, there's a balance between how profitable it is as well, but it just may not be worth it. One of the reasons I don't trade butterflies is, I trade butterflies in a very specific way just because of the nature and the construction of them. But I traded them, and with the specific requirements that I needed for the butterfly pattern, I was only getting like 4 opportunities a year. It just wasn't worth it. Financially, it wasn't worth it. Mentally, it wasn't worth it. Considering what it takes away from what I can be investing in as far as focus on other things, it just wasn't worth it. So there is a line there where you have to say, hey, it just doesn't provide enough frequency for it to be worth it. And that line is going to be different for different people. Some people could be like, hey, I am okay trading on a daily chart and getting 1 opportunity a month. Some people are going to be like, hey, no way. Not enough. I'd rather trade something that has a lower win percentage with a higher frequency because it could be more profitable than trading something with a higher win percentage and a lower frequency. But then you'll have people that say, hey, I'm going to trade something with a very low frequency, but because the win percentage is so much, I'm just going to put on a massive amount of risk. And then you run into your own problems doing that. So it's all about that balance. But yeah, for me to continue the continuation on here, eight out of, and that was pretty much how it was across the board, less than 10%. So I'm looking at 8 out of 133 trades. Not worth trading on its own. Something that I was going to look into, like, hey, is it worth looking at all? But then it is profitable, so there's no harm. Because if you're looking for other signals, then it's there anyway. There's no sense of ignoring it if you're looking at a specific time frame. But trading it just by itself, it just doesn't have the frequency. Now, you can create frequency. You can create frequency by saying just trading more pairs. So if you say, hey, I've only got 8 on this one pair, but if I trade it on 20 pairs, now I've increased the frequency, right? So you found a solution to your problem. But that also requires that you find 20 pairs that it works on, right? Currently, I don't have 20 pairs that it works on, right? Currently, I don't know if I sold the sheet that I showed you guys in the Trading Edge video, right? I've tested, what, 6 euro dollar, pound dollar, Aussie dollar, dollar Canada, dollar yen, 5 or 6. And currently only, what? I don't have it in front of me. I deleted it. But currently, what, 3? 3 are working really well. And then there's some other ones that are like, kind of working. Keep them around, but not working on, not working well enough that I would trade them in their own right. But they could be helpful to a portfolio as far as evening things out. So that also comes with the balance as well, where you see when you're done your testing, where it's like, hey, this thing has low frequency, but it worked on every single pair, even the ones that lose on the other signals. And then, hey, then it could be worth trading in its own right. Yeah. So you got to get the full picture. That's why we test. That's why we go through the process, so we have all the numbers. And then once we have all the numbers, now we can separate them, we can combine them, and then we can play around and get the full story. Until we have all the numbers, we don't know the full story, so we can't answer all the questions yet. So when I'm speaking of trading it just in its own right, I'm just speaking as of right now. Maybe it does explode over the next whatever pairs, and it could be something. Hope you guys enjoyed the episode. If you want to stay in the loop with how my strategy development journey has been going, see if this thing ends up being something that's tradable or something that's a complete dud, make sure you follow the journey over on my YouTube channel. Just YouTube search Akil Stokes. I've been keeping you guys updated with each of my weekend videos, so the ones that come out on Saturday or Sunday. But of course, we have new daily uploads, each and every day. YouTube, search Akil Stokes, and I'll see you guys next episode.